Welcome to the deep dive. Today, we're jumping straight into the cryptocurrencies. We've got a whole stack of articles, all fresh from June 18th, 2025.
That's right.
And our mission, really, for you listening, is to give you that shortcut. Cut through the noise, figure out the key market signals, the regulatory stuff, and yeah, some pretty wild analyst predictions. We're going to kick things off with Injective INJ.
Yeah, and I think that's the real value here. It's not just listing headlines.
Right.
It's about connecting those dots, seeing how these different stories, maybe seemingly unrelated, actually weave together.
Definitely.
To give us and you a, clearer picture of what's actually happening, where things might be going, seeing that bigger board.
Okay, let's get into it then. First up, this piece from CoinSprobe. It caught my eye straight away. The headline asks, is Injective, INJ, gearing up for a bullish reversal? This fractal saying yes.
It's a fractal.
Yeah. So for anyone not deep into charts, Injective's a layer one, right? Big on DeFi. This sounds, significant.
It is interesting. And, when they talk about a fractal here, it's more than just like a random pattern repeating.
Okay.
Technical analysis can be a bit, subjective sometimes. But the article seems to suggest this isn't just wishful thinking on a chart.
Right.
It implies there might be some underlying market mechanics at play, maybe something with on-chain data or volume shifts supporting this pattern. A fractal saying yes in crypto. It often means several factors might be lining up, not just, history repeating itself line for line. It could be a point where old resistance flips to new support, setting up for a move higher.
That makes sense. Technicals aligning with fundamentals, potentially. Powerful stuff. And speaking of powerful moves, that optimism often needs a boost from the wider market, doesn't it?
Absolutely.
Which brings us neatly to this really bold forecast from the Crypto Times.
Oh, yeah. This one's a headline grabber. Analyst Brad Mills. Well, he's put out an astonishing prediction.
Astonishing is the word.
Bitcoin, he says, could potentially hit an unprecedented $3 million per coin.
Wow. Okay. That's...
Yeah. I mean, that's a potential 100-fold increase from where we are, roughly.
100x.
It's not just throwing a number out there, though.
Yeah.
I think it signals this idea of a fundamental re-rating of digital assets, within the whole global financial system.
So not just digital gold anymore.
Exactly. That kind of target implies Bitcoin moves way beyond digital gold. It suggests it becomes, maybe even a reserve asset for big companies, maybe even nations, which would force a complete rethink of, like, traditional investment portfolios.
Yeah.
What's your gut feeling on that? Is that totally out there or something we might actually see down the line?
$3 million Bitcoin feels audacious now, but then again, look how far we've come already. It's hard to just dismiss it, right?
It's true.
It makes you think about the ripple effects on everything. But, okay, while we're talking big predictions, the actual rules of the game are changing too. Let's pivot to regulation. Crypto Newsland reported on the Genius Act.
Yes, this is huge. A really landmark vote, actually, for the U.S. crypto scene.
So what's the core of it?
Well, the Genius Act, it's basically the first major crypto bill setting clear rules for stablecoins, how they operate, who oversees them.
Okay, specifics.
The main things are it requires stablecoins to hold reserves, like equal amounts of cash or treasury bills, and follow strict rules.
Proper backing.
Exactly. This kind of law is, it's crucial for stability, for transparency. It makes stablecoins potentially a much more reliable bridge between, TradFi and crypto.
And it probably helps the U.S. dollar's role, too.
Definitely.
Right.
It could really bolster the dollar's position within crypto, give people more confidence. It's a much-needed step, I think.
Okay, so the U.S. takes a step forward with the Genius Act. But then, on the flip side, Cornerbune EN flags this warning from Franklin Templeton about Europe. Is that a serious worry or just, some competitive noise?
I think it's a legitimate concern, actually. The warning is pretty stark.
Yeah.
It says Europe, even though they were kind of early movers on regulation.
Right, with MiCA and all that.
Exactly. They risk falling behind now, potentially becoming, and this is a quote, nothing more than a corridor through which innovation passes without ever being retained.
Ooh, a corridor, that's not good.
It's not.
Yeah.
Especially when you see how fast the U.S., with the things like the Genius Act, and also Asia, are moving to set up their crypto frameworks.
So the talent, the capital,
yeah,
it just goes elsewhere.
That's the risk. If the regulatory environment isn't agile and, frankly, supportive, innovation might just bypass the region. Makes it harder for Europe to grow its own crypto companies, its own ecosystems. It definitely puts the spotlight on that global competition for crypto innovation.
Yeah, corridor for innovation really paints a picture, shows how fast things can shift. But, okay, despite those warnings for Europe, we are seeing some definitely positive signs elsewhere, particularly institutional interest, right?
No.
It's Bitcoin World had that piece on the US Spot Bitcoin ETFs.
Yes, and this is a really strong signal. Market maturity, you could say.
What were the numbers?
US Spot Bitcoin ETFs, they saw remarkable inflows.
Yeah.
$217 million. And the key thing is, this isn't just retail hype. This is sustained demand. It signals strong interest from institutional investors.
Big money.
Right. Big financial players getting comfortable, wanting exposure through these regulated familiar products. It just underlines how Bitcoin is increasingly seen as, a legitimate asset class within traditional finance. And that's driving a lot of the market activity we're seeing.
Okay, so we have the big picture. Bitcoin predictions, regulation, institutional flows. But what about the smart money? The well-informed individual investors. We've got two articles touching on altcoins here. One's 3 cryptos smart money is accumulating, and the other's about Kaspa. Top wallets keep buying KAS despite crash.
Yeah, this is fascinating because it shows just how diverse the strategies are in the altcoin space. It's not one size fits all.
Right.
So the first article highlights 3, CRO, from crypto.com. The idea there is it's gaining momentum from utility trading, payments, all the services on their platform. So that's like a bet on the whole ecosystem growing.
Makes sense.
Then there's PI. That one seems more about a specific event. They're eyeing a rebound because 68 million tokens are unlocking, supposed to boost network activity. So more of a catalyst play.
Okay.
And the third one mentioned is PEPE, which is just noted as showing bullish strength. So that points more towards like momentum trading or community narratives maybe.
Different reasons for each. And Kaspa.
Now Kaspa, KAS, that's the interesting contrast. The article says despite a huge crash, like 65% down from its high back in August 2024.
Ouch.
Yeah. But the top wallets are reportedly still buying it, accumulating.
Huh. So while the price is down, some big holders are doubling down.
Exactly. For smart money to do that, buying into a major downturn like that, it suggests real conviction. Maybe in the underlying tech, Kaspa's got that unique DAG architecture. Or just a really strong long-term belief in its potential, even if the market isn't seeing it right now.
So it shows smart money isn't just one thing. It can be ecosystem bets, catalyst plays, momentum, or even deep conviction buys during a crash.
Precisely. It's nuanced, often contrarian,
Yeah.
always looking, beyond just the immediate price swings.
Okay, so pulling this all together, what does this mean for you listening? We've covered quite a range today.
Yeah.
Specific coin stuff like Injective's fractal, those huge Bitcoin predictions, the major regulatory moves in the US with the Genius Act, warnings about Europe possibly falling behind, but also strong institutional ETF flows, and then these, contrasting altcoin strategies from the smart money.
And that really is the whole point of doing this deep dive, isn't it?
Yeah.
You need to stay informed across all these different areas. The technicals, like fractals, the market sentiment, driving those big predictions, the crucial regulatory actions, the global competitive picture, and of course, that growing institutional interest.
You have to see how they all connect.
Exactly. It's crucial for actually understanding this space because it's so dynamic, it's moving so fast. You need to see how all those threads weave together.
Absolutely. So for you, our listener, maybe here's a final thought to chew on as you navigate this pretty complex market. Given everything we've talked about, these contrasting signals, bold predictions, strong ETF money coming in, but then regulatory steps forward here, warnings of stagnation there. What do you think will be the single most impactful factor, the biggest driver for the crypto market's direction over, say, the next year? And maybe how do you position yourself for whatever that might be?